All right, for all the disruptors there, I want to welcome you to your first franchise. I've got a very special guest today. He is an ex-athlete. He played football for Penn State. We can ask him a little bit about that in a second. But he is the founder of First Financial, which really specializes in the space of working with franchises. Uh, Dan, I want to welcome you to your first franchise. And you and I were just together in Salt Lake City. It was great seeing you in person. And I'm glad you got home in time to do the podcast because it sounded like you had a long trip coming back.
Oh, thank you very much, Joel. Yeah, you're exactly right. It was a journey getting home from Salt Lake, but blessed I got back safe and sound, and I was looking forward to this for a while. Me and you spent time in Salt Lake chatting about how we're going to put this on today, and I really look forward to the opportunity to working with you and your clients. So thank you for having me aboard today.
Oh, I'm glad to have you on board. First of all, IPG just to knock it out the park every time we catch up with each other at one of these conferences that they host. But I didn't realize you played football for Penn State. What position did you play? I'm just curious.
I was a middle linebacker. Many years ago.
And today you're a cyclist still. You're big into cycling.
Yeah, I still enjoy my road bike and getting out there. My problem is I'm as competitive in sports as I am in business. And, I'm 67 years old now, and I go out there and I try to ride with these guys in their 20s and their 30s. And, by the time I'm done, I need about a 4-hour nap. But it's enjoyable. I've traveled around the country with my bike, taking it different places and doing things. And I've actually ridden my bike from Fort Lauderdale to Chicago. Took me quite a few days to do cross-country route, but that was back when I was in my 30s. But it was a really cool ride, seeing all the country, and having a group follow me. Nowadays, I'm happy if I get from my house up to Boca Raton because I live in South Florida, which is about 15 miles there and about 15 miles back. So I'm still pretty happy.
Hey, look, I love sport. Sport is, from a mindset thing, it plays well to business. And the competitive piece I get, I really appreciate that. And I love the fact that you're still doing it. And yeah, I keep doing that. I love it. I love it. I love it. All right. Real quick, who or what are you grateful for from the past that helped you get you where you are today?
Well, that's a twofold question. One, I'm always grateful to God because God got me here. He took me from sports world after some injuries and said, this is where you need to go. And he's been my guiding path ever since. But I have had mentors my whole life, to be honest with you. Back from my days when I was working at the Mercantile in Chicago as a commodities broker, all the way up until equipment leasing era of my life when I had a mentor. I've had mentors all through my life, all entrepreneurial people, and all telling me one thing: make money, being out there and being your own boss. Do what you need to do. But I had to learn my industry. So I had to work for a lot of people over the years. But 27 years ago, I said, enough is enough. And I came out, formed our company, First Financial, and I mentor people now, which I'm very proud of, I'm part of SCORE. I'm helping people get into business and doing that. But if I were to pick one person that was always my mentor, it would probably be my Uncle Dino. He is 97 years old last week.
Wow.
Been an entrepreneur in the restaurant business his entire life. He taught me everything I needed to know about life, along with my father and my other Uncle Joey, which my whole family is just entrepreneurs. And they all said to me, son, when you get into this stuff, there's one thing I want you to remember. You don't get rich using your own money. And that's one of the reasons I went into banking, because I realized that there was a need there and I saw how they did it. So that group of my family were very good mentors for me. So I thank you for asking that, because most people wouldn't even wonder how you got to where you are.
It's an important part of the journey. And you talk about mentors. I mean, and where I am because of mentors, I'm very blessed to have had a string of great mentors, and And it's not like a little short term, it's like long-term mentors for years and years, and still to this day. And I am very grateful for that myself. Then let's segue. How did you decide to go into when you started First Financial? Was it for the franchising world? What got you going with your own company? What was it? And
That's a really good question. When I started in this industry, I worked for banks, and then I went out, and I was also an entrepreneur at that time. I chose the health club industry because I like to work out. I enjoy it. I still do to this day. So I had quite a few gyms, and all these guys would constantly be calling me. Hey, do you need money? Do you need equipment leasing? What do you need? I mean, constantly calling me. And I self-funded a lot of my projects with my father and my family's help. But I started thinking there's got to be something to this industry because too many people are out there. I mean, calling me daily, asking you need money. And remember, this was back in the 80s. It was a little bit different environment, but I endeavored into equipment leasing. First Financial was actually formed on that as a broker / direct lender back in the 80s. And I quickly realized that there was a huge need for it. And I worked in the fitness industry, obviously. So I had all those contacts for guys who needed Gold's Gyms, Planets, you name it, all these companies that needed equipment all the time. So it was a wonderful match for us for probably 10 solid years. We did fantastic. We still do it to this day. But the difference is I saw that a lot of people needed money, actual money, working capital, build out, whatever it may be. And it wasn't for equipment. So one of my mentors at US Bank said, Dan, you need to learn SBA stuff because SBA is where it's going to go. And since then, I've never shied away from SBA. They taught me. His name was Mike Russo, was the president of US Bank back then. And we've never stopped since then. We're well over $2 billion of money that we've loaned out to people.
wow.
And the need never stops. There's always going to be entrepreneurs, and you yourself know that because that's what you do for a living.
That's right.
And it's amazing how it's grown and grown and grown. The SBA guarantees billions and billions of dollars every year, and it increases every year, even through COVID. So there's never an ending of the pipeline, I guess is the best way to say it, because there's always somebody looking to do something. So hopefully that kind of casts something on people that they would expect it and understand.
Okay. So what I want to do is I want to unpack this because you teed this up beautifully. I want to unpack the type of funding you provide. I also want to unpack your experience because you've been on both sides of it where you've invested in the franchise where you lease and you also switched to some degree where you started investing in the property. And we'll talk about the franchise. I know you had some Planet Fitnesses and so forth. Let's look at the general packages that most people are talking about, and then we can talk about the land play, the real estate play as well, because there's some fits certainly to that. So let's look at the main programs you promote and you help people with the SBA, Express Loans and so forth. Mm-hmm.
There's a few of them out there. Most of what we do in the franchise world, and we do some mom and pops too, but I'm a big believer in the franchise world. The reason I am is because one, I was a franchisee, and two, you don't have to physically know the brand that you're purchasing, like franchise, because they're there to teach you and to train you and show you how to market and show you how to hire people and what jobs to bid on. So to me, to pay a franchise fee is well worth what you're going to do compared to being a mom and pop, because now you got to figure out all that stuff on your own. And I know guys who own businesses and actually transfer them over to certain franchises because they see those 1-800 call-in numbers and those ads and all that stuff. It creates business for you without you marketing it. So the SBA is endeavored in all of those. Now, most of what I get, there's two types of loans I get. I get what's called a 7A product, which is an SBA loan, but there's different types of 7As. And it depends on the different banks. Some of them only do certain things. So we happen to do them all. So the bread and butter program with, let's talk like companies like IFPG and your groups like that, are the express loans. Express loans are simple products for working capital for either startups or existing businesses. And it's a $150,000 loan. That's basically what it is, based off of a 10-year time frame with no prepayment penalties. You're getting in with minimal amounts of money, normally 10% down type of philosophy. Like I said, no prepayment penalty. And you're going into business with this money. Mm-hmm. And a lot of the organizations like yours, there's a lot of franchises, believe it or not, that only cost $150,000. A lot, some are home-based, some are just little shops that you might need a brick and mortar, but a majority of them are home-based. That model, we do millions and millions and millions of dollars every year in. I think last year we did 67 million just in funded press loans.
And it's 150 up to 150,000, 10 years, no prepayment penalties. What about collateral? Do they have to put up? Let me ease in here for 1 second. Dan's going to shift gears here in a moment, talking about the real estate play. At the end of this podcast, I'm going to share how a friend of mine leveraged the real estate play to do extremely well. And I've got a brand new book coming out, which I'll talk about toward the end as well. And it's called Your First Franchise Roadmap. And you can check it out at yourfirstfranchise.com. Yourfirstfranchise.com. Now let's get back to the show.
There is no collateral. I'm sorry, I should have mentioned that. The only thing you're doing is personally guaranteeing it. And that's off the balance sheet accounting. So what that means is it's not like if you get a mortgage or a credit card or a car. These never appear on your personal credit.
Okay.
Nobody sees it. The only thing anybody would really see is either one inquiry to Experian or Equifax.
Okay.
And it really depends on which credit we pull that day.
Okay.
It's been a bread and butter program for a lot of franchisors and a lot of clients and a lot of consultants like yourself, because there's more people looking for the smaller loans. If you're going into something for your first time, a lot of people don't want to invest $1 million.
Sure.
Yeah, they want to see how it goes. And that product is really a prominent product for us. The second one, we call it the dream loan. And we call it the dream loan because anything from that 150 up to $200,000 or up to $500,000, I'm very sorry. There is no collateral needed again. So we're not putting liens on your personal real estate or things. It's based off of 10 years again. The difference with the bigger loans is there's usually some interest only periods, anywhere from 3 to 9 months of interest only. Down payments, once again, are pretty much the same. They're 10 to 20%, depending on your financial strength. And also we count the franchise fee as part of your down payment, as if you gave us the money. So it's another great product for people that are looking for the franchise that's a little bit bigger. They need more equipment, or they need a brick and mortar building to operate it. And within your stable of franchises, there's quite a few of those out there too. We've seen a huge intake of those types, especially the ones that have a lot of equipment involved, like vans or, trucks or whatever they need for, depending on the industries, for home service, that type of stuff.
And they can depreciate that.
Once again, no prepayment. It almost mirrors the express loan, but the key to these are, to give you an example, an express loan, I can approve you within 24 hours, and I can physically close your loan in anywhere from 12 to 30 days. You're in business. It's that simplistic. Okay. The only thing that slows both of the models down, the express or the dream, is if you need a location, and we can't physically close until you have a location, because if we're financing your build out, we got to know where it is, how much that's going to cost. And those things tend to slow down the process. But in all good faith, if it did move along quickly, that's another loan that should close anywhere from 30 to 60 days on the dream loan side.
Gotcha.
They've been very successful. And they're also used quite frequently nowadays for resales. So, the big factor now is a lot of people are selling their businesses. There are tons of good resale businesses out there where 3 and 4 years ago, and let's even not even count COVID because that was a whole different animal for everybody. But even pre-COVID, there wasn't a lot of people selling their businesses. Nowadays, you're seeing it more and more and more. Any given week, we have 3, 5, 6 resale people coming to us. And, depending on the arena, and we look at everything. There isn't a brand that we really don't look at. We look at emerging brands. There's a couple that I'm not wild about industries because of defaults. But once again, we look at the client first. We look at that person and see what their background is and go through that. But those two products have just been booming. Okay. The third one is what we like to call big ticket. Big ticket is anything over that $500,000. And we can do, SBA allows you to go up to $5 million. So a lot of loans that we see are bigger loans, either equipment, somebody buying a building, which we're going to jump into here shortly because there's a huge demand. And it's a bigger loan. To give an example, in the fitness arena, to open up a nice sized gym, like I used to do, those 20, 30,000 square foot boxes, they're a couple $1 million now. And that's not buying the building. That's building it out, because we're going to do their construction. We're going to do their FF&E. We're going to give them working capital. We're going to put everything into that one loan. That's where that 7A model comes into play. The big factor is once you go over $500,000, the SBA guidelines, it's called the SOP, Standard Operating Procedures for the SBA and United States Treasury Department, that backs all SBA loans for folks. Okay. There's a guarantee that the government's willing to give for people to start a business or buy a business. And it varies with the size of the loan. It's 85% of the loan. But when you're in the bigger things, we have to follow these guidelines. And that one guideline is, if it goes over 500, we're supposed to look for additional collateral. So additional collateral can be a lot of things to different lenders. My banks are basically looking at real property. Real property to us is real estate. We're not going to put a lien on your stocks, your bonds. We're not asking you to open up bank accounts with CDs in them, that type of stuff. If you have real estate and you have equity in it, we're going to put a lien against it. If you don't, it doesn't mean that we're not going to do the loan. It's just what we call in banking blue sky. Blue sky means there's a lot of equipment, client's good, but there's no other additional collateral. So we're okay to do that because think of what I just said. We're getting a 75% guarantee back from the federal government if somebody defaults. And basically that's why all lending institutions use the SBA, because it's a safeguard. You really have 25% at risk if the government's giving you 75% guarantee of it. So, and that 7A program, a lot of people are out there. We use it for resales. We use it for startups. Every loan that I'm talking about today can be used for anything they want. Partner buyout, startup businesses, resale businesses, mergers, all different types of stuff. SBA is there to help people. The fallacy that people fall into is it's not SBA loaning the folks the money. It's the banks. Banks are getting the guarantee from the SBA in order us to do it. I talked to 5 people a day to go, well, when is the SBA going to give me my money? And my famous line is never, because they don't. There are a few scenarios where it happens, and that's in our next product, which is the 504 loan. And this will be the last of the SBA products. There's other things out there. There's Express for, existing businesses, but on a podcast, it's a lot of information. So the 504 is basically for where we're going to filter into is for building purchases. People that either have their existing business and they want to now buy a building because they're tired of paying rent. And let's face it, rents are going up and up and up. Landlords are making up for the COVID era. even though the government paid them their rents and our taxpayers paid their rents, we paid it. They're increasing rents more and more and more. And realistically, in a lot of cases, it's easier to buy the building because when we're doing leasehold improvement loans, no matter how big it is, leasehold improvement, so everybody understands, that means build out. So let's say I'm putting a gym up, or I don't care what it is, whatever the brand is, and I need a physical location. We're building out that location for somebody that you do not own. It's that simple. So it's a 10-year note that we carry when we're doing any of those, from the Express, the Dream, to the regular 7A loan. Okay. So it's sitting there for 10 years. When you buy a building, well, we take the whole project and we amortize it over 25 years. So there's a big difference. When you really run numbers, your payment when you buy a building, depending on where it is and what the costs are, California, New York, certain states are much more expensive. But in average, when you run it, your payment's actually lower by buying a building. And what makes it better is when we start, the building appraises for a certain amount. Let's say it's $1.5 million. Once we do all the build out, we have it completed, and you reappraise it, it's probably worth $700,000-$800,000 more. You've already created equity in your business, and you didn't really do anything yet. You haven't even opened yet. So I'm seeing a big swing over to that. Right now, I'm working on 3 or 4 of them. They're all existing people who are, and this is the funny part. They're existing people who are paying rent in that location anyhow. And the sellers are, and the people are willing to sell the buildings to them because they've been in it a long time. And the values are so up, they're cashing out. And our clients who have existing businesses figure, why would I not buy it? The only stipulation when you're buying a building through SBA is your business must occupy 51% of the space that we're financing. You can have rent roll. You can have other people dividing them up and paying you rent, but you have to maintain 51%. SBA is not out there for speculator business. We can't loan you money because you want to go buy a building and rent it out and make a profit from it. That's called speculation. But you can do it if you're in the building and operating 51%, and then you have 3 or 4 guys that are paying you a rent roll. So it's very feasible. And those 504s are unique products. I don't want to really get into all of it because it's 2 loans in one, because the government does back 40 to 50% of the 504 loan. But you can do a 7A loan on a building, or you can do a 504, depending on which you want. 504s are a little more painstaking because they have to be underwritten by the bank, and they actually have to be underwritten by a division of the CDC, not the CDC in Atlanta, by the way. It's not the Center for Disease Control. It's the insurance agency of the SBA. They have to physically take the packet again and underwrite it again, because they are the ones that are going to guarantee that larger percentage of it. So it's 2 loans in one. But when your clients are interested in that and you refer them, we will spend a lot of time teaching them the difference of the 2. The only thing I didn't touch base on really is rates, because rates are varying right now. They are at a 22-year high. I'm optimistic, like pretty much every economist in the country is, that we're due for some cutbacks here within the near future. I don't like to estimate, but I would think by end of 3rd quarter this year at the worst, we're going to start seeing some numbers coming down. Right now, prime is 8.5%. Loans can go anywhere from prime. They can go from prime up. Most banks do not loan money prime because that's what they're paying. Normally, unsecured products like the Express and the Dream loan, if we're not collateralizing anything, we're usually a prime plus 2.75 right now. but that doesn't mean we can't look at it differently. Once again, it all comes down to the financial strength. When you get into bigger ticket loans, it can go anywhere from prime plus 1.75 up to prime plus 2.25. I leave that open when I talk to clients because you have to understand in the beginning, we really don't know the financial strength of a client until we pre-approve them. And
Understood.
once we see all that, that's when we put a letter of interest together.
Mhm.
We go over it with them and say, okay, this is where you're at. Now go make your move. Get back with Ewell, find your franchise, find your building, do whatever you have to do. And we're here waiting for you to tell us you're ready to go.
And
So
we haven't seen any. We haven't seen any hesitation for people getting into business because of the interest rates. Now, at some point, if it goes down, they can
we right now, that's a very good question. Right now, most of the loans that we're writing are adjustable. They adjust quarterly with Wall Street. We can always fix a rate. Any bank can fix a rate if they like to. But I try to tell people, if we fix it now, you're stuck.
Yeah.
You can't come back to me when rates come down and say, oh, Dan, now I want an adjustable rate. It doesn't work that way, unfortunately. So I try to tell people, look at the adjustable, because this is the worst case it's going to be. And this is where it's going to eventually go to. Now, we can't predict the future, and I can't tell somebody we're never going to see pre-COVID rates again, obviously, because rates were down, that banks were borrowing money at nothing and putting it out pretty much at nothing, to be honest with you. But, we're going to get down out of the double digits, and we're going to get back to what it used to be pre-COVID type of stuff. You're going to be in the 8s, the 9s. And let's face it, everybody who takes a loan depreciates it anyhow. I listen to people. I understand it. I've had loans myself. I'll be honest. The first loan I ever got was in 1986, and I paid 14% interest through the SBA, and I was happy. And but I understand the world got accustomed to the lower rates.
Sure.
Then I also say you got accustomed to 10, 11% on your credit card. Look at what your credit card payments are now. Look at what your interest rate is now.
Exactly.
And you see a substantial difference. But you are right. In the beginning, it slowed down a little bit because people were in sticker shock, I like to call it. But the last year, nobody's really...
Nothing's stopping. I mean, we go to conferences and everybody's moving.
Right? I mean, if an interest rate is going to deter you from starting a business or buying a business or buying a building, you were never interested in doing it anyhow, because you're going to depreciate all that money that you're borrowing. Your account's going to write it off. Everybody knows that. So, but I kind of look at it that way and say, if you don't want to do it, I get it. There's other alternatives. Take your money from your retirement account, do a rollover. There's a lot of different alternatives to borrow funds, but if you're interested in the SBA, unfortunately, I can't control the rates. Send a letter to your congressman is the best way to do it.
Well, that is the perfect place to button this up. I want to ask you, what is your number one piece of guidance for somebody considering entering the franchise world?
Another great question. You must have been preparing these for a while, huh? I'm just kidding. Yeah.
Yes.
People have to do their due diligence. You have to sit back. You have to look at your financials yourself. Talk to your spouse if you're married. Make sure you're both on the same page of doing this. Determine, am I going to keep my job and run this as a semi-absentee business? How can I structure it if I leave? But really, you need somebody like you. You need that consultant who has 500 or 600 franchise brands that they can talk to you about. And once you wind it down to 3 or 4 franchises, let's say, really do your due diligence. There's things out there, folks, that are called FDDs. They're financial disclosure documents. I read hundreds a year. It's painstaking. There's a lot of information. But I can tell you one thing. If I was investing $100,000 or $5 million, I would read that FDD from cover to cover because franchises must disclose everything within that FDD. And I mean, everything has to be in there. Take your time, do your due diligence, make sure it's a business that you think you're going to enjoy. I'm not saying you have to love it because there's a lot of businesses out there you can make money that you're not going to love, but you got to be able to figure out that structure and take time. I talk to clients are looking at 5 different franchises, but not just that, 5 different completely industries. Yeah, I don't know. I want a restaurant. I want a gym. I want a service industry. I want a trampoline business. You got to kind of take your time and pinpoint it out. And God bless they have people like you because you know how to handle that. You know how to show people what's the best thing for them to look at and the best cash business that they can make money. And I think that's the easiest thing.
Well, Dan, appreciate it. That's a lot of words of wisdom right there. And Dan, folks, if you would like, if you're going to go down this road, you're going to need financing more than likely. It's smart to use other people's money. So as you explore franchising and you decide to go down that road, Dan is one of the persons I may introduce you to. So Dan, I want to thank you for your education, helping us educate the public and those that may be considering a franchise. And I look forward to seeing you at the next conference. That's how we keep learning from each other. Appreciate it.
You got it.
Friendship.
I look forward to seeing you too. It's always a pleasure, my brother. Once again, thank you from the bottom of my heart for having me be part of this.
Oh, it's my pleasure as well, sir. Thank you. And that is a wrap with Dan. And folks, I asked him, obviously he's got the different financial background. I asked him specifically to speak to the real estate for a reason. I've got a good friend of mine, and this goes back 20 years ago. The seeds were planted for me many, many years ago. A good buddy of mine sold his seafood business, and he went into the franchise business for a reason. He wanted to invest in the land, and he's like, I don't care if the land, if the franchise makes a dime as long as it can float the note on the land. Now that was tongue in cheek because he ended up going into a restaurant franchise, ended up with 6 or 7 major, 6 or 7 locations in key locations, and he sold out 10 years later, and he did extraordinarily well because not only did the business thrive, the land appreciated significantly, and it was just a great play for him. So if you're considering that, Dan is the man to help you with that, with that pay. And of course, all of his other funding options as well, the express loans and so forth. So if you're looking to explore franchising, I've got a brand new book out called Your First Franchise Roadmap. I'll be glad to send you a free copy. Go visit yourfirstfranchise.com and I'm going to get you a free copy. All you have to do is ask and I'll send it to you. Or if you like a paperback version of it, you'll be able to get it on Amazon. I do charge for it there, but know this, 100% of the profits are going to Make-A-Wish Foundation. And that's for everybody who likes to write and take notes in their book. And that's what I like to have, the physical book. So either way, you can get the book for free or you can make a donation and help out a great cause with Make-A-Wish. And you know the drill, and the drill is very simple. Be intentional and make today a great day. Bye-bye.